Hi guys, it's your favourite YouTuber again, Dami Solari, and you're watching DS Learning Finance. Whoa! Now I've made this video to tell you why you need a credit card if you don't have one, and if you do have one, you need more. Most people say credit cards are bad for you. I don't. Keep watching to find out why. Maybe your parents have told you not to get one, maybe your siblings have told you not to get one, maybe even your friends. I would say forget them all. Be a lone wolf, make your own decisions. The only rule that I do have is that you spend the money that you have in your bank account. Not in your credit card account, not in your dad's mum or sister's or brother's account, in your account. How much money do you have in your account? So that should be the maximum amount of money you can spend on your credit card, how much you physically have. So to put that in perspective, if I had £100 in my NatWest account, because yes, I bank with NatWest, they're hard, but yeah, if I had £100 in my bank account, on my credit card, I will never spend more than £100, if that. So if it's £100 and 10p, not gonna happen. If it's £100 and 1p, not gonna happen. £100 is the maximum amount of money I would spend with that amount in my bank account. Don't worry, times aren't that hard right now for me. Don't take out more than you can afford, that's my only exception. With that said, credit cards basically work on delayed payment. So they're really good for increasing your cash flow temporarily. And by the term cash flow, what I mean is, you know, when you're looking to buy a specific jacket that you like, say middle of the month, yeah, but you actually get paid towards the end of the month, so you're like, oh man, I want this jacket now, but I don't really have the money now to pay for it. Let me just wait to the end of the month. That's what bad cash flow would do for you. So a credit card improves your cash flow because it gives you enough money then and there to buy that jacket. Now I'm not saying you should buy the jacket, that's just an analogy, but what it does is it allows you to have that sort of initial money to pay for something and then delay the payment later on, which tends to be a month. So that was just one advantage, but the major thing with credit card is that they significantly improve your credit rating. What is a credit rating? A credit rating is simply a number that tells companies that you're looking to borrow money from. It tells them how dependable you are, it tells them how reliable you are, and basically how likely you are to pay them back their money at the end of that loan period. So you want the highest credit rating ever, because that basically tells the lender this person pays their loan, pays back all of their loan on time every installment, which is what a lender wants. They want their money back. So that's what the credit rating is really notorious for doing. Now you're probably thinking, why do I want to improve my credit rating? There are so many benefits of improving your credit rating. Anything that you need to borrow money from, automatically the interest rates become lower, so you don't have to pay back as much because you're not that much of a liability anymore. You're seen as dependable. So stuff like a mortgage, stuff like buying a car on finance, stuff like getting a loan, you simply don't need to pay the lender as much money as you would have if you had a bad credit rating. Like I said, because they see you as a dependable person, they no longer see you as a liability. So you guys know how it is. When there's more risk, you therefore have to have more interest, and when there's low risk, therefore have less interest. And that's why you really need a good credit rating. So if you're planning on getting a house and you don't have the money to buy it outright, which is 99% of the time, you need a mortgage. Yeah, you definitely need to have a good credit rating, because you ultimately don't want to be paying back thousands of pounds. And even though, like, so say for example, if you had a bad credit rating and your interest rate on your mortgage was like something like was around 3%, and then you were to compare yourself with someone the exact same credentials as you, but they had a good credit rating, and that therefore meant that they had a mortgage rate of like interest rate of like 2%. Yes, it seems like there's not that much difference between the interest rates. True, when you involve the amount that a house costs, which is hundreds of thousands of pounds, yeah, it can be grands deep. So it's really important to focus on getting a good credit rating, because ultimately if you buy things using your card using the money you have, ultimately why not buy those same things using a credit card and then just simply paying it back on time? And if your credit rating is very bad, then you simply won't even get the mortgage in the first place. You simply won't get the car finance, you simply won't get the loan that you need, you simply won't be seen as trustworthy. They'll completely block you there while you're even trying to attempt. So yeah, you need at the very least a good credit rating. So credit card improves your cash flow, it improves your credit rating, but also it provides bonuses as well for certain specific type of credit cards. So there are some that are out there that actually give you vouchers and like coupons and discounts, and potentially even give you free things depending on which sort of credit card you go for. I bet I've got your attention now, and I bet you're thinking, what affects your credit rating? There are two main things. History. This is probably the biggest factor. How long have you had that credit card for? Someone who's had a credit card for 10 years and has made payments regularly on time, never missed one payment, will be valued way over someone who's just gotten a credit card and maybe he's just had it for a year, even though they still have been paying, on time. Someone simply, experience speaks for itself. Time tells it all. The second thing that affects it is credit card utilization. When you get a credit card, you'll be given a credit limit. This is the maximum total cumulative amount that you can borrow from that company. So my first credit card is actually with Nationwide. My credit limit was 1,300, so I can never go above that amount. So even if I really wanted to, even if I went to ATM and tried to pull out some money, which don't do because they overcharge you for that, they charge you your money for that. But yeah, say I went to do that and I already took out 1,300, I would not be able to take any more. I physically can't. So it's the complete cap, the total cap that you can take out from that credit card. That's what your credit limit is. With that said, you just want to use only a bit of it on the credit card. You don't want to use a massive amount. Why? Because it comes back to what I was trying to say. The more and more of your credit limit you use, the more it seems like you depend on that credit card. So if I bought, I don't know, flat screen TV and maybe a freezer and maybe something else that accumulated to 1,300 in the first month, I look like a very risky customer, don't I? Because it seems like I'm using that credit card just to fund such a huge amount of money, as opposed to someone who just spent up to £100 every month. So that's what your credit card utilization is. It's how much do you actually spend compared to how much your maximum credit limit is. And with that said, you want to keep your utilization very low, because it means you're seen as not dependent on that credit card. So how low in particular? Less than 9%. So for me, I've got £1,300 credit limit in my Nationwide card. So I set myself a cap. I never spend more than £117 every month. And then when it comes to the payment period where I have to pay the money back, I always pay that whole amount in full, straight away, on time. This shows Lender that ultimately you don't need them, and therefore you're not really seen as desperately needing the money, which in turn boosts your credit rating. Now some of you are probably thinking £117 is nothing. This brings me back to my only rule. Don't spend more than you have. Never spend more than your bank account can afford. It's important to stress a credit card is not a financial debt solution. It is not. It is just a temporary way, i.e. monthly, on a monthly basis, a solution for delaying your payments. I personally just delegate one particular task every month to that credit card. So I wouldn't go shopping using my same credit card. I wouldn't go topping up fuel using my same credit card. No, I wouldn't do that. I'll just delegate one particular task to the credit card. So what I tend to do is I tend to spend it on grocery every month. So every month when I go Sunday food shopping for the next week, that's when I'll put that amount on the credit card, and therefore it keeps me sort of regularly organized, and it means I don't lose track of myself. I don't lose myself in calculating how much I actually owe that credit card. And it's just better in terms of controlling and minimizing how much you spend, trying to stay within that 9% utilization. If grocery shopping is not for you, then maybe you can use it for fuel. There's tons of different things that you can use it for. Maybe if you are really into like buying soaps or into fragrances, maybe you can use that to buy the fragrances that you need every month within that 9%, like I said. But yeah, that's pretty much what it is. It's just you delegate it to one particular task. If you're still thinking, oh, £117 is not enough, I'm just using £117 as an analogy, but yeah, if you're probably just thinking, oh, £117 is not enough, or whatever it is, £1,000 ain't enough, or as long as you're within that 9% credit card utilization, then what you can do is increase your credit limit, i.e. get more cards, more credit cards. So I'm with Nationwide, why not try Barclays? So I'm going to get 1,300, I'm going to get 1,300 from Barclays as well. So therefore my actual amount that I can spend on a monthly basis is double that. So it's the £117 times 2, so it'll be £234. And I would have been able to double the amount I can spend and still remain within that 9% credit card utilization. So that's how you can get around, but I can't stress it enough. You need to make sure you pay back those credit cards on time in full amount every month when the payment is due. And that's how you stay within that 9% threshold. Credit cards are powerful tools for delaying payment, but ultimately you've got to remember, at the end of the day, it's your money. Do not spend more than you have. There we go. But yeah, you guys know next week's video is going to be a continuation from this one. I hope you guys enjoyed it. Keep watching, stay tuned, and don't forget to like, subscribe and share DS Learning Finance. Whoa.